In a pivotal development within the financial realm, BlackRock, the global asset management behemoth, convened an exclusive gathering to delve into the intricate landscape of Bitcoin, marking a potential watershed moment for cryptocurrency's integration into traditional financial frameworks. The clandestine insights gleaned from this closed-door event, as disclosed by Stephen Lubka, Managing Director and Head of Private Clients and Family Offices at Swan via X, formerly Twitter, offer a compelling narrative of BlackRock's evolving stance towards Bitcoin and its implications for investors worldwide. Lubka's revelation sheds light on 4 profound insights shared by BlackRock during the private event. Firstly, it was disclosed that BlackRock orchestrated a bespoke gathering exclusively tailored for its esteemed clientele, with a strategic aim to advocate for the Spot Bitcoin Exchange Traded Fund, ETF. This strategic move underscores BlackRock's readiness to harness its formidable marketing machinery to champion Bitcoin and its ETF product, potentially heralding a new era of institutional endorsement for the cryptocurrency. Moreover, an intriguing revelation surfaced regarding BlackRock's acknowledgement of a burgeoning interest emanating from traditionally conservative investment sectors. Senior figures within BlackRock reportedly acknowledged receiving inquiries from unexpected quarters, signaling a notable shift in BTC's perception and an expanding appeal across institutional echelons. This newfound interest from conservative investors not only reflects a growing acceptance of Bitcoin, but also underscores its increasing legitimacy as a viable investment asset within mainstream finance. BlackRock's groundbreaking recommendation of a 28% portfolio allocation to Bitcoin represents a seismic departure from conventional investment wisdom and carries profound implications for investors globally. This bold guidance, articulated by BlackRock's quantitative analyst during the private event, reflects a significant shift in institutional attitudes towards cryptocurrency as a legitimate asset class worthy of substantial investment consideration. The rationale behind BlackRock's advocacy for such a substantial allocation to Bitcoin lies in its recognition of the cryptocurrency's unique attributes and its potential to enhance portfolio diversification and risk-adjusted returns. While traditional investment principles often dictate conservative allocations to alternative assets, such as commodities or real estate, BlackRock's endorsement of a substantial Bitcoin allocation underscores its confidence in the cryptocurrency's ability to deliver long-term value and mitigate portfolio volatility. Moreover, BlackRock's recommendation of a 28% allocation to Bitcoin is not merely a speculative gesture but is rooted in rigorous quantitative analysis and strategic foresight. The firm's quantitative analysts likely assessed Bitcoin's historical performance, its correlation with traditional asset classes, and its potential impact on overall portfolio dynamics before arriving at this bold recommendation. For investors, BlackRock's endorsement of a significant Bitcoin allocation presents both opportunities and challenges. On one hand, it validates Bitcoin's status as a legitimate investment asset and could embolden institutional investors to allocate capital to the cryptocurrency, thereby driving further price appreciation and market liquidity. On the other hand, it underscores the need for thorough due diligence and risk management strategies, as Bitcoin's inherent volatility and regulatory uncertainties could pose challenges for conservative investors unaccustomed to the dynamics of the cryptocurrency market. Overall, BlackRock's recommendation of a 28% portfolio allocation to Bitcoin represents a landmark moment in the evolution of cryptocurrency within institutional investment circles. It not only reflects a growing acceptance of Bitcoin as a legitimate asset class, but also underscores the increasing convergence between traditional finance and the digital economy. As investors navigate this new frontier, thoughtful consideration of BlackRock's guidance alongside individual risk tolerance and investment objectives will be paramount in capitalizing on the potential opportunities presented by Bitcoin's integration into mainstream investment portfolios. Additionally, the disclosure of BlackRock's intention to leverage its extensive distribution network to promote Bitcoin and its ETF product underscores the firm's strategic commitment to mainstreaming digital assets within investment portfolios. Lupka's insights suggest that BlackRock's dissemination strategy is not confined to its elite clientele, but is poised to reach its entire client base following initial absorption by top-tier clients. This strategic dissemination approach could potentially amplify Bitcoin's visibility and accessibility, further catalyzing its adoption across diverse investor segments. The familiarity of the boomer generation with ETFs could influence their potential adoption of Bitcoin. Boomers traditionally prefer conventional investment vehicles and professional asset management. A Bitcoin ETF could provide them with exposure to the cryptocurrency market without the complexities of self-custody and direct ownership. This could alleviate concerns about security, regulation, and technology barriers associated with cryptocurrencies. The sheer size of the boomer demographic and their significant wealth accumulation make them a considerable force in driving Bitcoin adoption. Their entry into the Bitcoin market through ETFs could bring institutional capital, boosting Bitcoin prices and establishing it as a mainstream investment asset. However, widespread adoption is not guaranteed, as boomers will approach Bitcoin with varying levels of skepticism and caution based on factors like risk tolerance and regulatory uncertainties. The convergence of boomer familiarity with ETFs and institutional interest in Bitcoin could lead to significant capital inflows into the cryptocurrency market. Yet the extent of boomer adoption will depend on regulatory developments, market dynamics, and individual investor preferences. Implications and concluding thoughts. In conclusion, the revelations from BlackRock's private Bitcoin event not only underscore a burgeoning institutional interest in digital assets, but also herald a strategic maneuver by BlackRock to integrate Bitcoin into traditional investment paradigms. This strategic endorsement by BlackRock may serve as a catalyst for other financial institutions to reassess their stance on Bitcoin and cryptocurrencies, potentially fostering increased adoption and investment in the space. Thanks for watching, and don't forget to subscribe to stay updated for future groundbreaking news.